Recording now. Hey everyone, welcome to another Sky community call. Today it's Wednesday, July 16th, and yeah, I have the pleasure here to being with the Grove team. They're going to be explaining a little bit more what Grove is doing, what their plans are, and things for the future. As a small reminder, Raji from Viridian is not going to be joining us today. He's on transit, so he wasn't able to join. And as always, if you have any questions or any comments, feel free to drop them in the chat, and we'll address them as needed whenever we can. So yeah, thanks everyone. And if you guys want to take it away, Mark, Sam, and Kevin.
Yeah, absolutely. Hopefully everyone can see the screen right now, but excited to share a little bit more about what we're working on over at Grove Labs for Grove Protocol. Here with my two co-founders of Grove Labs, Kevin Chan and Sam Tataruski. I'm Mark Phillips, the co-founder of Grove Labs, as well as Steakhouse Financial. If you haven't already, throw us a follow on Twitter, grove.finance, and check out our website, grove.finance. And take a look at our blog post. We'll be posting regularly there with new information about the protocol, about products we're launching, and kind of anything that you need to know about the Grove ecosystem. So if you haven't already heard, Grove is an institutional grade credit protocol. And what we're doing is building credit in liquidity infrastructure on top of the Sky ecosystem that will allow the Sky ecosystem to access and provide credit to various on and off-chain credit opportunities. We are leveraging existing infrastructure through the liquidity layer. You can kind of track this on-chain on MakerBrain in the Sky.info website. And one of the main things we're focused on is enabling Sky to access scalable, durable, and diversified off-chain yield. So a lot of people kind of refer to this project as the RWA SAR because we have a focus on off-chain yield sources. We're also going to be making allocations and doing deals on-chain, especially around liquidity. But in order for this project to scale, Sky and Grove as a whole, we need to have an uncorrelated off-chain yield source to be able to kind of continue growing the savings rate and ensuring that the savings rate remains high during periods of downward crypto market volatility. So with the announcement, right before Ken, we announced we announced the $1 billion allocation to the Janus Henderson AAA CLO fund. So this is a floating rate CLO product, yields between 100 to 200 basis points over SOFR, and this will be kind of the first allocation that Grove is making. Another key focus of Grove's is on-chain liquidity. So we want to work with DeFi protocols, new layer 1, layer 2s to help bootstrap their DeFi liquidity and DeFi ecosystem. We see various protocols and blockchains with a significant demand for liquidity, building stablecoin liquidity, building RWA liquidity, and building crypto collateral liquidity in DeFi. And we feel like we're extremely well positioned to kind of move cross-chain and help these ecosystems bootstrap and help novel DeFi protocols kind of build some foundational capital and grow. So why does this matter for Sky? One, we're significantly increasing the capital efficiency of Sky's balance sheet and enabling them to allocate to scalable off-chain credit opportunities. So today and historically, Sky's been over-allocated to cash and cash-like assets. And that has significantly led to that has led to an underearning. Yeah, I'll drop in for a second, Kevin.
Yeah, for sure. So, effectively, today, the remit of Sky's balance sheet has been focused on cash and cash like assets, which has been sufficient for Sky's needs today. But as we grow the protocol, we're looking to diversify the underlying backing portfolio to, as Mark mentioned, the initial allocation being $1 billion into CLO and public credit like products. But as we continue to mature and as we continue to grow the platform and protocol, we're looking at a variety of um, uh, institutional private credit and as well as protocol credit type assets that will further drive a diversified source of yield for Sky and the Grove protocol. So that's kind of the basis of the Grove allocator, and we're building that protocol out as we speak. You want to? How do you feel, Mark?
Yeah, I think voice is a little better. Just gonna keep hydrating. My AC died at the house, so it's like 90 degrees here. So immediate roadmap, immediate next steps. As I mentioned earlier, we're commencing the CLO allocation next week, targeting around 25 to $15 million a day and kind of scaling that up. That'll result in a roughly $13 million uplift in revenue for the Sky ecosystem. And that's going to split between capital coming from T-bills and coming from the PSM. We're also going to be announcing a partnership with a new layer 2, as well as the first kind of private credit allocation in August. And then following that will be the rollout of our first kind of product or solution, which is that protocol-to-protocol liquidity product. Effectively, this will enable asset issuers and token issuers to build liquidity in DeFi at a much lower cost relative to what's on the market today. There's an ecosystem of kind of shadow financing entities from market makers to like Delta Mutual hedge funds that are basically providing that liquidity today, charging 25, 30% for liquidity in DeFi. And given the balance sheet and cost of capital that Grove has access to, we can offer these sorts of solutions at a much lower cost to these end users while still being very high margin for the protocol. Longer term, we have a few different kind of products in the pipeline. The first product is called Grove Savings. Grove Savings is a new yield product that's going to be complementary to SUSDS. So where SUSDS is an instant liquidity savings product, Grove will be a product with a little duration. You're targeting 3 or 4 weeks of duration, and that'll be with an unstaking period. But that'll enable the people that are more long-term saving oriented to earn a little bit more yield. So we think that products like Maple, Syrup, USDC, and USDT has kind of shown that there's significant demand for a durable product that's sourcing yield from off-chain with an in-staking period, but earns 100 to 200 basis points more yield. There's no incremental cost to Sky for Grove Savings. It's essentially funded off of the Grove balance sheet. Grove Liquidity is the second kind of key product, and it's kind of related to that first service of protocol to protocol liquidity I mentioned before. So this is going to be kind of a next generation on-chain liquidity tool where basically entities can kind of plug into a vault and draw capital from the Grove balance sheet and use that to basically solve transactions. So if you're using CalSwap, Uniswap X, or submitting a intent-based transaction, we will be able to solvers will be able to plug into our vault and route capital from our balance sheets to effectively make markets on chain. This will enable dynamic, deeper liquidity in DeFi, and we're really excited about this one. And then lastly, for the kind of original roadmap, will be Grove Leverage, which is a protocol designed to make it much easier and straightforward for anyone to access leverage and have subordination on yield-bearing tokens. So right now in DeFi, I think generally as like a senior lender, if you're lending against yield tokens through like a Pendle token, the senior capital in that structure is earning like generally like 5, 6, or 7% with only 10% subordination, generally speaking. And the people levering up on that trade are earning 30, 40, 50% plus, which I think is a pretty bad trade for the senior lender. And building a solution that kind of streamlines how people get leverage will increase capital efficiency, rate predictability, and eliminate liquidity traps for lenders. So the end result to this will be like better and more efficient yield for everyone in the capital stack. It'll probably push down junior leverage rates because it's going to be a lot easier to lever up and get access to that yield. But it'll also push up senior lending rates, which I think will be very attractive to a lot of people that are looking for a little bit of a safer yield product, but still maintaining some kind of protection for that subordination. So that's the kind of initial allocations and products we're kind of working on. Happy to answer any questions that you guys may have.
Nice. We do have a few questions. The first one is, I believe Spark has 400 million in centrifuge. Will Grove allocate an additional 1 billion or just 600 million?
So we're in the process of moving the treasuries over to the Grove balance sheet. So Grove will be managing the treasuries and kind of all of the RWA types of allocations going forward. We're going to be offboarding some treasuries, reducing some others to make room. But it's going to kind of depend on what the balance sheet looks like as we scale up the allocation. We can't just buy $1 billion of this product in kind of one day. It has to be spread out over probably anywhere from 4 to 8 weeks, depending on market conditions. And depending on what Sky's balance sheet looks like at the time, this will come from either T-bill allocations, PSM, or other kind of allocations that have been made across the ecosystem.
Nice. Thanks for that, Mark. The next one is by Chris Clay. It says, how are the returns on real-world assets like Biddle compared to our USDC deposit with Coinbase? Will we see investments in better return real-world assets or ones with lower fees? The 0.5% seems excessive.
Yeah, so we actually have a much, much lower fee for products like Biddle. One of the advantages to being a star in the Sky ecosystem is access to scaled capital, and that really improves our negotiating position when we're going to these T-bill issuers, which are pretty commoditized products at this point. It can kind of heavily push down and negotiate stronger fees. So we're actually paying less than 10 basis points for that product. The USDC PSM is earning 3.75% right now. T-bills are all earning around 4.2%, and the CLO product will earn about 100 basis points higher than that, so 5.2%, call it. So we're going to see probably anywhere from like $12 to $15 million in incremental revenue from moving that mix of T-bills and RWA T-bills or in the PSM over to the CLOs.
Neat. Hopefully that answers your question, Chris. Let us know if there's any follow-up. Next one is by Sapna. Your product roadmap looks great, exciting stuff. I'm wondering if you can articulate why launching Grove as a star was the right choice. How does it make you more competitive? What friction points did it remove in launching a new DeFi protocol, etc.? Thank you.
Yeah.
For me, it's not entirely clear, Mark, but maybe you have a better answer than me.
Yeah, obviously, so Grove was incubated within Steakhouse. We've been involved in the Sky ecosystem for a long time, and Sky, I think, is one of the few opportunities that there are in the ecosystem of DeFi to be able to have like a very impactful presence and kind of push the RWA industry forward in a very meaningful way. Frankly, there's just not a lot of opportunities where you can sit down and say, hey, like we can put $1 billion into some RWA products. A lot of the kind of highest capital allocators in the space are either venture funds or some sort of asset manager, and they're not using or incentivized to use a lot of tokenized products. So for us, it was a huge opportunity to be able to push the RWA industry forward in a meaningful way because we have this capital behind us that can kind of bring down the cost of tokenizing these various RWA products and bringing them on chain. And that's kind of the key objective of ours is like, how do we take existing off-chain products, bring them on chain in a cost-effective way that actually makes them a better product to own on chain versus holding it off chain? Because today there's a lot of friction in bringing these products on chain. There's generally higher costs. And with Grove, given we have significant scale, we can hopefully enable people to access these products at a lower cost, either directly through our partners like Centrifuge and BlackRock, but hopefully indirectly as well through Grove savings products.
Nice. I think it was pretty clear. Civic Sage is asking, is it possible to describe how savings work? I'm guessing Grove savings, or is it secret sauce? Not sure how much you can share about that. Sure.
Happy to explain. It'll function very similarly to SUSDS, except there's going to be an unstaking period. So instead of having instant access through kind of like a primary redemption module like the PSM, you'll either have to unstake and wait, or you can trade it probably at a discount, but maybe not in the secondary market. Obviously, we won't have control over what it would trade at in the secondary market, but it'll enable people to earn a little bit more yield. And that yield will be coming from various indirectly through various on and on off-chain credit sources. So we'll be kind of setting a rate with risk committee. Will be setting a rate, and then that will kind of fluctuate over time.
Nice, super clear. Thanks, Mark. MKR Midcurve is re-asking regarding Spark having 400 million on Centrifuge, if you're going to allocate an additional 1 billion or just 600 million. So I don't know if you want to re-explain the transferring the assets and the latter part.
Yeah, the 1 billion CLO allocation is coming from a mix of T-bills and the USDC and the PSM. So we're going to look and make sure that we're maximizing the yield from reallocating, but we haven't disclosed exactly like which T-bills will be sold. Generally, they're pretty similar products. So it's not like, yeah, no problem.
Nice. Next one, it's a bunch of questions by Synchrotron. First one is, what steps is the team taking to ramp up more permitted KYC whitelisted wallets? Example, BD, TradFi sales, possibly marketing, etc. I don't know if there's anything regarding KYC whitelisted wallets, or if you're touching that topic at all.
We're not doing anything right now with KYC or whitelisted wallets. I'm not sure what the kind of context is here.
Yeah.
I think we're mostly focused on going from 0 to 1, winning DeFi market share before kind of scaling outside of the DeFi ecosystem.
Mm-hmm. Next one is, how do you plan on scaling from 1 billion to 100 billion for product market fit?
Yeah, I'd say we're mostly focused on going from 0 to 100 million first. Once we, surpass a billion with this product, hopefully, we'll kind of rethink our strategy. But initially, we're going to have a heavy focus on DeFi integrations in various borrow lend protocols, distribution channels, either on separate blockchains, upstream with exchanges, wallets, custodians, etc. But I think the roadmap will look a lot different between 0 to 100 million and 1 billion to 100 billion. No one's really grown these sorts of yield products, even BlackRock, past a few billion. So that's going to be a completely different challenge.
Yeah, exciting times. And the other one was, lastly, in the future, will Grove allow participants to directly against their CLOs on platforms like Centrifuge? Not sure which verb.
So it means trade.
Yeah.
But trade or collateralize maybe. But yeah, if you clarify in the chat, there's not going to be any trading in terms of these products in the platform. You're making a direct allocation into the CLO product. We definitely want to see these products used in DeFi. We have something kind of in the works for some of these products that we're making allocations to in the next couple of months.
We're saying that they meant borrow.
Borrow. We would consider lending against CLOs in various products. It won't be directly on the Grove platform, though, if we do something like this.
Right. Nice. Thank you for the question, Synchrotron. Next one is, how much revenue do you expect to drive to Sky? Asked by Bob.
So for the CLO allocation itself, that'll be anywhere from 12 to 15 million in incremental annualized revenue. Beyond that, I don't want to make any financial forecasts. This is all non-financial advice, by the way. Please read the disclaimers we have on the forums regarding forward guidance and whatnot. But we think there's a ton of opportunity if you look at make the Sky balance sheet over the past 3 to 6 months and kind of look at how much USDC has been in the PSM. As we kind of ramp up and lay down the pipelines to different off-chain credit allocations tools, off-chain or on-chain credit allocations, Sky is just going to be way more capital efficient and enable us to collectively earn a lot more revenue. I don't want to put any exact numbers to that because the market fluctuates so much, and a lot of it is dependent on the overall USDS and DAI supply. So if that's growing, there's obviously a lot of kind of revenue to be earned off that incremental balance sheet size. Right now, we're focused on how can we build products that are complementary to the existing Sky products? How can we increase the capital efficiency of the balance sheet, and how can we drive new demand for USDS and DAI? That's kind of our initial focus for the next 3 months.
Yeah, I was going to mention there are different concepts that are being defined right now in terms of risk framework, in terms of all these ratios and how things are going to be looking in terms of scalability. So that's also going to have an impact. It's not just your own forecasts and how much reward assets can you get, right? So that's all going to have an impact on the final numbers.
Yeah, well, as we start off with our allocations, we'll be building dashboards that'll make this a lot easier to track. Yeah, sorry, go ahead, Mo.
No, for sure. I was going to go to the next question by Chris Clay saying, the private mortgage, private corporate debt market seems to be the new big thing. Any inroads or thoughts there? No idea if it's possible to get anywhere near that legally.
I'd say we're generally interested looking at a broad set of opportunities. The difficult thing with real estate in general is typically they're long or very long duration type assets, and we have a very high preference driven by the risk framework for very short duration, liquid types of credit assets. So doing anything, I think, in mortgages would be difficult. We're looking at some private credit stuff right now. There's certainly some opportunity there. I don't know if you want to add any comments, Sam, on kind of what you're seeing in private credit and credit markets in general. The spreads have tightened a bit, but do you have any comments there?
Yeah, I mean, it's definitely something that we're looking at. I think there's a reason why so many people have been interested in private credit. I think we can approach it similarly to the way we've approached deals in the past. So as far as your question about legal concerns, Maker has a long history of engaging with these private credit deals starting back in 2021. So we are able to leverage a lot of the learnings from back then to set up these structures that can efficiently onboard these assets. So I would just say, yeah, we're taking a close look at it. We think there's some good opportunities if we can manage the duration and liquidity risk. And we think some products are certainly better suited than others. But as we do this analysis, you'll be sure to hear from us as we onboard more products to come.
Yes, thank you, Sam. Next one is about CLOs. So it's also by Sapna. What has the reaction response been with your CLO partners and others you've been talking to on the TradFi side of CLOs and private credit, etc.? Basically wondering about what you see happening in that area as they start to see the first crypto projects and liquidity start to reach out and interact with them.
Yeah, I can take that one too. I think the biggest reaction from TradFi is that they kind of discovered this new pool of capital that may be interested in getting involved in structured credit. I don't think they necessarily quite understand everything that's going on with Sky or with tokenization, but something that everyone responds to pretty immediately. It's a new buyer base. So certainly upon the announcement, I heard from a lot of my old contacts in the TradFi world who see the headline and see what's going on, who want to learn more. And certainly more issuers who see the new product announcement and wonder if they can build something similar and what they can do to be more useful and provide a similar service to Grove. So it definitely stirred the pot a bit, and I think it's some exciting new things will come out of it as more and more people start to pay attention.
Nice. And what would you say is the biggest challenge there, Sam? Is it the bridging the assets? Is it the volume, the scale? Is it making sure that everything checks out from the legal point of view?
Yeah, I think it's a little bit of everything. I think from our perspective, it's really just finding the right assets that make sense for Sky and structuring them the right way. I think we have a lot of people, tokenization platforms that come to us and ask us what we would like to see tokenized, what they think would be a good offering. So there are a lot of people willing to help. I think the hard part is finding the good assets and the good fit for Sky's balance sheet and the nature of USDS.
Nice. Yeah, makes sense. I think we're running out of questions from the audience, which is good. What's the best way for people to reach out to you if they have some proposal or if they have questions or anything? What's your preferred method?
Yeah, feel free to DM one of us on Twitter. We can post the Twitter kind of handles to the forums, but also just emailing the Grove .finance link for the email is for that account. But it's on the Grove website, grove.finance. Follow us on Twitter, and feel free to kind of slide into the DMs there, or just make a post on the Grove sub forums on the Sky forums.
Any big events that you guys are going to be attending soon? I'm guessing the one in Brooklyn.
The RWA Summit?
Yes. Are you guys going to be there?
I think at least one of us will be at the RWA Summit in September. We'll definitely be going to Token in Singapore. And probably just kind of heads down getting things done until then.
Nice. Makes sense. All right. I don't see any more questions from the community, so thank you, Mark, Sam, and Kevin for joining us and presenting Grove. It's been quite interesting. So yeah, for anyone looking at the recording, if you have any questions, you can go to forum.sky.money or ping these guys at their Twitter. Thanks, everyone.